All right, everybody, it's me, Gregory Mannarino. It is Tuesday, February 2nd, 2021. Before you even get started, I want to say thank you sincerely to all of you who stood up and decided to support my work yesterday. I greatly appreciate it. I appreciate every one of you. That is the truth from the heart. Now, let's get back to work. Right now, as I am doing this video blog, live on CNBC is Federal Reserve President Kaplan. This is the same guy who yesterday explained that the Federal Reserve needs to pretty much go nuclear with regard to debt issuance. But his message this morning is a little bit different. Now he's Dr. Kaplan. Dr. Kaplan right now on CNBC is explaining that as many people as can possibly happen need to be vaccinated to save the economy. Now, I don't know, I find that somewhat disturbing that Fed presidents are now wearing doctor hats. Where did he get his medical license from? How about Bill Gates? Same thing. It's disturbing when you have Fed presidents and members of the elite class dictating the rules for the rest of us. But this is the new world order. This is the American way. Again, we are in the transition, I would say. It's a major transition to a dependent slave society. People 100% dependent, yet again, on the government. This is what they want. Again, it's that two-tier society I have explained to you for like a decade would eventually happen. Well, we're here now, and it's about to get much uglier. There's no doubt about it. All right, so let's talk about this market real quick. Right now, stock futures are higher across the board, pointing towards gains at the open. Now, look, I've been trying to put a light on this for all of you since this correction started. That's all this is, okay? That's all this is. And again, I am trying to put those of you who are overly concerned that this is more than that in some kind of ease. Stop. I understand where you're getting it from. There's YouTube channels out here pushing the crash narrative. Look at the 10-year yield today. 10-year yield today, right now, 1.11. So 10-year yield went higher. Yesterday, it was 1.079. What does that tell us? Cash is leaving the debt market. When cash leaves the debt market, 10-year yield goes up. That cash looks for places to go. It's going into the stock market, henceforth why futures are higher. This is why, again, people stop focusing on the stock market. The stock market is a random walk with an upward drift. The bond market is more stable because why? We have a Federal Reserve buying it all. Again, going back to Fed Kaplan yesterday, explaining that the Federal Reserve needs to be aggressive. Like they are not aggressive right now. Their balance sheet doubled last year just about. You have Federal Reserve President Neil Kashkari yesterday literally saying, pedal to the metal. This is the Fed. The Fed is fulfilling their end game, to be the lender and buyer of last resort. Meanwhile, people aren't doing anything. They're just sitting back and letting it happen. We have Congress, we have our new puppet president talking about trillions of dollars in more stimulus for the economy. It's not gonna work. You see, here's the deal. Biden, puppet Biden, he's part of it. He's part of the situation, just as President Trump was, to allow the Federal Reserve to get stronger. Every dollar the Federal Reserve issues, they get stronger. It's an incredible situation. I want you to think about this real quick. So we have nuclear debt. This is, again, started last year with the Federal Reserve's balance sheet. It's going to get much, much worse. Now, just to maintain the current environment, the debt must increase. What does that mean? The debt is higher today than it was yesterday. Tomorrow, the debt will be higher. Meanwhile, we're just maintaining. Actually, we're not even maintaining. Our economy remains in free fall. So think about it. Debt is expanding on an unprecedented scale, and our economy is still in free fall. They shut down the global economy, people. They deliberately shut down the global economy, central banks, via the scamdemic. Okay, it's a real virus, but they shut down the global economy. They did this so they can inflate without causing hyperinflation. You understand? This is a scheme. It's a complete setup. So the central banks, again, this has been foretold to us many years ago that they would use something like this. Shut down the global economy. Central banks massively inflate, print all the cash they want out of thin air. The Federal Reserve is funneling dollars around the world to central banks who are buying assets with a near zero chance of massive or hyperinflation because there's no money velocity, the rate at which cash is moving through the economy. They had to shut off the money velocity. We are at historic lows right now. This is, really flying under the radar of most people, and you will not hear a word of this from the mainstream media. You're not allowed to know what's going on, that money velocity is at historic lows. The central banks are inflating by design. And again, the debt must increase. Tomorrow, the debt will be higher, although the economy will still free fall. A week from now, the debt will be higher. Economy will still free fall. It can't stop. The mechanism demands that process keeps going. Meanwhile, distractions. This idiot, that idiot, those idiots. And I'm talking about our politicians. The distractions, the arguments, the misinformation, the same stuff we saw under the Trump administration and under the Obama. It doesn't change. This is the new paradigm I've been explaining to you. We are in right now, and it's pretty incredible. All right, going back to the markets real quick. So. Stock futures higher across the board on the promise of more easy money from Fed presidents, the promise of trillions of dollars in debt, more debt from the Biden administration here, a possible new stimulus check, which they're going to hold in front of you like a carrot, like they did under the Trump administration, same thing. That's not going to change. So you got cryptocurrencies mostly higher right now. Gold and especially silver is getting hit after that run up yesterday. Again, you got brokerages playing the game. They're increasing margin requirements. Get used to it. Get used to it. That's the way it's going to go. And again, going back to real quick, GameStop. The hedge funds made so much money off of the rigging from the brokerages, off of what just happened, that now they are all not only made whole after their big bets against GME, but they are in the green by billions. So that's unfortunate too. But that's the way it's going to go here. All right, so let's see. What did I say? All right, markets higher. Cryptocurrency is getting a bit higher for the most part. Silver getting hit right now. Gold down. Dollar slightly higher right now. 10-year yield 1.11. People, I'm going to urge you, keep your eyes on that 10-year yield. Forget the stock market, okay? And I make this so simple for you. I really do. It's right on my lovely website, traderschoice.net, top of the second page. Follow it every day. Every day, look at that 10-year yield. What's it doing? If you see the 10-year yield rising in a controlled fashion, that means incrementally, more than likely, that cash that's leaving the debt market is going to make its way into the stock market. That's the way it works. Also, the Dixie, or the dollar index, DXY, it's in the same spot on my website, traderschoice.net, top of the second page. Follow the dollar. More importantly, follow the 10-year yield. And you will know with a high degree of accuracy where the stock market is going to go. Forget looking only at the stock market, okay? It's a distraction. It's a random walk. You understand? That's just the way it is. All right, people, look, I think I covered all the important points here. And again, a huge thank you and a big shout out to all of you who chose to support my work. I really do count on you. I love all of you a lot. And it seems like you love me back. All right, with that said, I'll see all of you at the end of the day. It's going to be just lovely as it is now. See you then.